Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100 as sentiment seems to have settled a bit here. It doesn't feel quite as volatile since the news was somewhat muted this weekend. Chris, what are your thoughts around what you're seeing today?
The market's been pretty interesting the last couple of weeks, right? The banking sector, the Fed comments last week, we got a whole slew of economic data coming out this week. That can be turmoil. Remember, earnings are now over, so we're both, again, focused on the macro. The banking crisis has been kind of interesting from a perspective on investor side, but as far as the NDX is concerned, we've been seeing a significant amount of inflows to the index, both in the tech sector and in the communications sector, which are kind of seen as insulated from this banking crisis that's going on. So that's why we've had 2 weeks of positive return on the index. Last week, we gained nearly 2%, even though we're giving back a little bit today. The consolidation across the rest of the market, people are starting to pick off a couple of stocks here and there. So you're seeing a kind of nice movement, broad base, even though we're only off about 20 points here in the NDX today. A couple of big items to look out for next week, especially GDP, the second revision on Thursday, consumer confidence. You got housing data as well. There's a lot going on that people are going to be focused on, and there's going to be a lot of people talking about whether or not the Fed is going to keep the terminal rate higher for longer. Even especially what Chair Powell said, investors think that there are going to be cuts at the end of the year. And Chair Powell said quite the opposite during his press conference. So again, it's a wait and see. Remember, the stock market is forward looking. So we'll see what the stocks have to bring for us in the week ahead.
And Chris, let's take a look at your first chart here with fresh technical levels to watch on the Nasdaq-100.
Yep. The chart's been very constructive lately. It's been consolidating here right below the 12,850 level. That corresponds back to the early February highs and again the September highs of last year. Haven't been able to break through that level. What's interesting, and we've noted before, my colleague Brian's talked about it, is that we had the 50-day moving positively through the 200-day in the middle of March and marked the low of the index since then. And with the index up almost 17% year to date, there's no reason to think that the index should not consolidate here further to try to make another run through that 12,850 level. If we break out through that, the next higher level of resistance is 13,420. But in the near term, support is 12,660 and 12,460. Resistance is 12,853, 12,940. The RSI is ticking at about 60, so we're not in the overbought condition yet. So the consolidation is good. I think we got some room here.
And your last chart here, what are the constituents leading the way?
Right, the breadth is about 60-40, give or take. A number of different companies seeing some nice moves. Again, the big boys are kind of split when you look at it. If you look at companies like Tesla, Amazon, all acting very well. Microsoft and Apple are both off about a point detracting. It's a net. Even though the breadth is positive, the index is still negative on the day because of the weighting of the larger constituents.
Yeah, I mean, Microsoft and Apple are 25% of the index.
Right, and Alphabet's right there too between the two classes. There, it's off over 2%. So the weighting definitely skews the larger cap companies, regardless of what the breadth is telling you.
Excellent point, Chris. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.